When I talk to many bosses of US listed companies, I find they all share a common misunderstanding. They think once the company is listed on NASDAQ, rings the bell, and raises funds, they can finally relax. That's a huge mistake. In the US stock market, going public is not the end, it's the starting point of market cap management. If you skip this lesson, the cost will be extremely painful. Why is market cap management a must-learn for US listed founders? Let me tell you 3 cruel truths. First, the US stock market doesn't care about your efforts, only your expectations. More than 70% of trading volume in the US stock market comes from institutional investors. These people don't care about emotions, only data. What they buy is not the performance you've achieved in the past, but whether you can continuously deliver on your promises in the future. If you don't know how to manage expectations, even if your earnings are good when the report comes out, as long as one indicator fails to meet Wall Street's forecast, a 15% or 20% drop in one day is common. When your stock price drops, the options in the hands of your core team become worthless, and your talents will leave. So, managing expectations is more important than managing performance itself. Second, market cap is your lowest cost financing tool. When listed in the US, your stock is your currency. When you need to acquire a technical team or issue additional shares to supplement cash flow, the higher your market cap, the lower the share cost you pay. On the contrary, if your stock price falls below $1, you won't even have the right to tell your story, and capital won't even glance at you. Third, guard against the sharks at the door. The US stock market is a market with highly dispersed equity. If your market cap is undervalued for a long time, those activist investors and short-selling institutions will swarm like sharks. They can shake your board seats with a short-selling report and a few calls to major shareholders. The company you worked so hard to build may no longer be under your control overnight. So, don't be an honest person who only focuses on business. In the US stock market, the cognitive height of the founder determines the ceiling of the market cap. Your investor relations team should roadshow like salespeople. Every earnings call is an opportunity to show value to global capital. Remember, founders who don't understand market cap management are essentially working for the capital market.